लगता है, जो हमेशा कल की सोचते हैं, बिल्कुल टाटा बिजनेस साइकिल फंड की तरह, जो कल की सोच कर ही बिजनेस सेक्टर्स में इन्वेस्ट करे।
म्यूचुअल फंड निवेश बाजार के जोखिम के अधीन है। योजना से संबंधित सभी दस्तावेजों को ध्यान से पढ़ें।
Welcome back. You're watching Buy Now, Sell Now on ET Now, and now time for our viewer queries. But before that, let me bring on board our guests for today. We have Kunal Bothra as well as Mr. K. Prabhakar joining us. Good morning, Kunal, as well as Mr. Prabhakar. Thank you for joining us on ET Now and for Buy Now, Sell Now. Let's move on and let's get on board our queries for today. And the first one that we have is coming in from Sumit. He's saying, what's the view on Polycab? He's saying, can we make fresh positions into this particular counter? Mr. Prabhakar, I come to you with this particular query. Given that Polycab Cables announced their earnings yesterday, and we've seen the sharp downtick come in on that particular counter due to the profit plunging because of higher raw material costs. But if somebody was to go ahead and invest afresh into Polycab, does it make sense? How are the fundamentals looking over the longer term?
See, Polycab and Havels are similar businesses where the raw material price has been impacting them. But Havels has given a better results compared to Polycab. I think any good correction would be an opportunity to buy. It is see, every company has passed on the raw material hike by hiking prices of their end product. So I think it is just matter of time that Polycab also does the same. So I don't think it will continue for other quarters. Maybe after the con call, things will be even more clearer how Polycab is likely to do their business going forward.
Okay, fair point. We've got a question on IDFC First Bank, and it's clearly a stock in focus today. Of course, the RBI is saying that that IDFC can exit its role as promoter of IDFC First Bank. Sunita has got a question for you though, Kunal. What is the best level to enter IDFC First Bank on the charts?
Well, the current price is a good price to start entering IDFC First Bank. I think it's a very good stock. The breakout which IDFC First Bank had shown 4-5 months back was a very strong and a durable breakout above those 37 mark. And post that, the stock has been taking comfort above the long-term averages. So I think at current levels of 50, 52 where the stock is trading, it's a good enough support zone where the stock seems to be bouncing back again. There is also some demand which is coming by into the stock at current levels. So I would sense that if you're in from a longer-term haul, then I think starting at current levels could be a very good opportunity for IDFC First Bank.
Alright, this one is coming in from Tony, and he wants a technical view on RCF for the shorter term. He's bought it at an average price of 84 rupees per share. How does RCF look, Kunal, on the shorter term?
Well, many of these mid-cap names, Cheryl, they tend to be in the thick of price action when there is, too much of flurry which is going on the mid-cap, end of the market. But, whenever the markets go into a bit of a sideways phase or a silent phase, these mid-cap stocks, they tend to cool off and go through a price correction. Now, luckily for RCF, the stock has not gone through a very sharp phase of correction. But what it's done is it's gone through a time correction. So the last 7-8 weeks, the stock has been sideways, trading at this band of 80 to 85, 86 for itself. So I would sense that this could be a good sign that the stock is trying to consolidate. If you're bought at levels or slight higher levels, I would suggest that look out for averaging closer to 80 levels or just a shade below the 80 mark. I think if you get that opportunity, I think that's where you can try to average further, bring your cost price lower, and then wait for the consolidation to get over. If the consolidation gets over on the upside, then I believe you could see a strong breakout. Maybe the stock coming back towards the 3-digit mark as well over the medium to long term could be a possibility for RCF.
All right, Satya has got a question for you, Mr. Prabhakar, and this is on CDSL. He's asking whether it's a good idea to buy on dips for the next 2 years or so.
I feel so. In last 15 months, the kind of growth CDSL has had, it is 100% increase in their number of clients. So they were, around March, I think they were 1.8 crore demat account holder with CDSL. Now it has crossed 4 crore accounts. That means, in 15-16 months, it has doubled their accounts. And, going forward, and hardly we have 6.25 crore demat accounts in India for a population of 135 crore people. At least we should be having 15-20 crore demat account. And the way CDSL is growing, for a long-term investor, it is still beneficial. So we like exchanges, we like these kind of accessories which give support to exchanges.
All right. The next query is coming in from Jayant, and he wants to know that I rather bought Happiest Minds at the rate of 957 rupees per share. He wants to know, is it good time to exit the stock at current market price? Kunal, what's your take on Happiest Minds? What should Jayant do?
I think it's been a phenomenal runner. Happiest Minds from I think 300 or 350 odd levels. The stock is almost at 1500 levels plus. Done exceptionally well, even though the chart history is a bit limited because of the very recent listing of the stock. But nevertheless, I think it's been phenomenal move for Happiest Minds. Now, what has happened is many of these indicators have come back into an overbought territory for Happiest Minds. For example, the RSI has come back towards levels of 88, 89 on the daily time frame charts, and that could result into some sort of a cool off or price correction. You've bought at a very attractive price of 900 rupees approximately, so you're already making some 50% on your investments. I would suggest that if you're in for maybe some sort of trading, then you can look to exit at current levels, or book at least partial profits at current levels, and then look to buy back again if the stock goes into a corrective phase. I think 1200, 1250 could be another better entry point for Happiest Minds if the stock happens to come back and correct at till those levels at least.
Mr. Prabhakar, I'm coming to you on Danny's question on Hero MotoCorp. Would you say that it's the best bet in the two-wheeler space? I mean, there are basically three options available for you, but would you say that going with the market leader is the best option?
Yeah, I feel so. The valuation, it is trading at 20 times, trailing PE. And it has a very good dividend yield, which is more than 3%. So the downside risk is very minimum from here. But very important is India is a major hub of two-wheeler, where Bajaj Auto has a major share, followed by TVS Motor. So if you want to buy something in two-wheeler, have exposure to Bajaj Auto as well as Hero Motor is my suggestion. But if you are playing dividend yield, which is 3%, and plus the valuation, I think very soon there can be a good rally. If you are looking at 10-15%. In next 1 year, it is possible in Hero Motor. But Bajaj Auto has the best export. More than 50%, 60% of their production is exported, and they are the market leader. So I think that is also something you can look at.
All right, this one is coming in from Matthew John. He wants to know, he wants an advice for the longer term for Hindustan Foods. He wants to know whether he should invest at a current price for the longer term. Kunal, if someone wants to enter Hindustan Food at current market price, does it make sense? How are the charts looking for this counter over the longer term or medium term?
Well, Cheryl, I don't track the stock that often, so won't be able to offer any comment on it.
No problem. Mr. Prabhakar, do you track Hindustan Foods if you want to advise someone for the longer term?
The market cap is less than almost 1,000 crore. Recently, the stock has done very well, but it is trading at 115 PE. So it is very expensive. There are better stock available.
Okay, the counter I want to talk about next is Prince Pipes, and this is a question coming in on YouTube. Shanmuga has bought at levels of 705, got 50 shares and is looking to hold for about 6 months. Kunal, what are the prospects on the charts?
Well, again, a stock which had done exceptionally well, a stock which in the last 12 months, 13 months has moved up almost 6-7 times from levels of 100, I think, if I'm not wrong, sub 100 levels, the stock had jumped up to almost 780, 800 quite some time back, and now it's in the process of cool off, going through a time correction. So I think the chances of a stock correcting and going through a consolidation over here could be pretty much high. I would suggest that have a trailing stop loss over here. I would suggest a stop loss closer to 670, 675 on your short-term trades, and I think if the stock happens to correct and come back to those levels, there could be it could follow up with a much more sharper correction into the stock price as well. So I would suggest that have a stop loss to this short-term oriented trade.
Alright, this one is coming in from Mahesh. He has Petronet LNG, which he's purchased for the longer term at an average price of about 219 rupees per share. He believes that it is undervalued compared to the peers. Mr. Prabhakar, do you also echo the same sentiment? How does Petronet LNG look over the longer term? Makes sense for Mahesh to keep it in the portfolio?
Yeah, I feel so. No, see, their expansion plan also will come on steam. And Cochin-Mangalore pipeline, which has been completed, the full benefit will come in next financial year only. And initially the pickup will not be so good, but after 1 year the pickup is likely to be good, and Cochin base, they will do very good. So I think for a long-term investor it is very attractive. It trades at 11 times trailing PE. So I think for a long-term investor there is no big problem in this stock.
Mr. Prabhakar, recent listing Sona Comstar, Sapna Samar is looking at buying into this counter. Would you suggest that that's a good idea, or do you think that there are better options out there?
What is the stock you asked? Sona?
So this is Sona BLW Comstar or Sona BLW
Okay.
Precision Systems, Precision Forgings, apologies. Yeah.
Yeah. So we have come with the initiating coverage on the stock. Now this company is a major EV electric vehicle supplier, and its speciality is they are major supplier in gears. So I think over a long period of time, when we move from other vehicles to EV, this company can be a multi-bagger. So we have a target of 460 for a short term, that is say 12 months. But for a longer term, I think 800,000 also is possible. But that is for 5 years and above. So I think it is a long-term bet for EV. EV is slowly evolving. So I think if you are a long-term investor, buy. But short-term, there can be some volatility in the stock.
This next query is coming in from Sagar, and this one he is talking about Saregama India. He's bought 250 share at a price of 450 rupees per share. I would request my producer to show the current price of Saregama India. Also, he's saying he earlier bought it as a swing trade, but now it's gone to a different territory. So he wants to know, should he continue to hold on for the longer term? Kunal, I'll come to you with this particular question. Saregama India, 450 is the levels that Sagar had purchased it, about 250 odd shares. Currently, if I'm looking at the screen, the current market price of Saregama India, I beg your pardon, is 3,270 rupees per share. So what should Sagar do? Book profits, continue to hold on for longer term? What's the strategy that he should adopt now?
I think he's done phenomenally well. The investments have risen by more than 10x for the investor, approximately for 10x for the viewer as well. And I think the stock has also done phenomenally well. I think from 180, 185 levels, if I'm not wrong, where the stock bottomed out in March 2020, it's rallied up to almost 3,500 plus levels. So again, a return of more than 17, 18x for the stock. But this is what happens typically when you see such a sharp upswing into stock prices in a very short span of time. It results into the stocks coming back into huge overbought territories. For example, on the monthly charts, the RSIs for Saregama India stock is almost to the tune of 94, 95. Now these are very high and extremely overbought territories of RSIs, and typically at these kind of levels, we advise viewers to have caution, at least have a trailing stop loss if you don't want to book out full profits, and if you expect some more continuation of rally, then have a trailing stop loss mechanism for such kind of names. For Saregama stock as well, I would expect something very similar. So I would advise that the viewer should have a trailing stop loss mechanism, say closer to 3,000, 3,100 is the first level of trailing stop loss which the viewer can keep on the investments for the stock.
I like how Kunal kept a straight face through that, because Cheryl was caught up in practicing her ragas with that one. We've got the next question coming in from Shrikant. He's talking about Tech Mahindra, and he's thinking of holding this for 10 years. He's gotten at levels of 600, which are quite the attractive levels, Mr. Prabhakar. Should he hold on for that long though?
Yeah, no, see, the last 5 years growth has been on average 7%. But if the company, they are doing a lot of things. So if the growth picks up to 15% CAGR, sales growth, then I think it is likely to do very well. And there is no problem in the company. But the problem is growth. 7% growth, our deposit rate is 5.5. Whereas the competitors are growing at 15% CAGR. You take Infosys, you take Tata Elxsi, or many other stock, LTI. Everyone is growing at 15%, about 10% they are growing. Here we have a company where the growth is slightly lower. But I think they are doing a lot of things to make a reasonable growth. And I feel IT as a sector has potential to grow at 15% CAGR for the next 10 years. So I will suggest to hold on to the stock.
Okay, this one is coming in from Sudeep, and he's saying that he has MSTC at 207 rupees per share. He wants to know, can this particular counter be a good investment over the next 2 to 3 years, and should he add at current levels? Mr. Prabhakar, what's your take on MSTC? Is it a good investment for the longer term?
This stock, no, I have never tracked it.
All right. Kunal, have you tracked MSTC? Would you want to offer your views on it?
So yeah, it was attractive, Cheryl, and I think it's a stock which tends to do pretty well in very short bursts of time. For example, there was this huge rally for MSTC, start of 2021, when the stock had rallied up from 200 levels to 400 in just a matter of, I think, few trading sessions, not even in a couple of months. But I think post that the stock has gone through a sideways price action. But what has happened is typically when the stock consolidates, we see a very significant drop in volumes. Participations are, they tend to drop down into these kind of names. But that's not happened for MSTC. In fact, the volumes have occasionally been firing up pretty well for the stock, which means that there is demand for the stock at lower levels. And I think that could probably indicate that if when the consolidation gets over, you should see a breakout yet again on the upside for the stock. So I would suggest a buy if you've already bought in. Then I think at current levels of 285, 295 approximately would be a good level where you can look to average further, and then wait for the breakout to happen. If the breakout happens, then the stock could probably cross back about that 400 mark, which was the previous major swing high for the stock.
Kunal, Everest Industries is currently trading at least its 52-week high, and it's had quite a year for itself, doubled over the last 12 months or so. Mayank is holding 2,000 shares at levels of 375. Should they hold on? Should Mayank hold on for one more year though?
Absolutely, I would recommend to hold on. In fact, I've been tracking the stock very closely, and it looks very attractive. The durability of the patterns are quite strong because the volume pickup for Everest Industries in the last 12-13 months have been quite exceptional. It started off with volumes participating quite well right from those March 2020 lows. It's not as if the stock got a lot of participation after you saw the market getting into some confidence or the first part of the rally got over. But right from the levels when the stock was at 120, 125 levels, the stock saw a lot of demand. So which means that there are buyers who are invested into the stock right from those much lower levels. and they're ready to buy the stock even at high levels of 440, 445, where the stock is currently trading. So it seems to be a good stock, a chart which is evolving quite well, and a stock which is recovering from those 2018 highs as well. I see a lot of potential on the upside for the stock over the medium to long term. So I would suggest the hold on the stock.
All right. This one is coming in from Anuradha, and she wants to know about the sugar stock. It's a fundamental query. She wants to know which are the preferred ones for an investment over the next 2 to 3 years, whether it's a Balrampur or Dalmia Bharat or Triveni Engineering. Mr. Prabhakar, what's your take on the sugar counters?
Yeah, no, it is a complete change in their fundamentals. I think Balrampur, Chini and Triveni, even EID Parry can be considered. Andhra Sugar, more than sugar, chemicals are doing well. So Andhra Sugar can also be there. So I have suggested 4 stocks: Balrampur Chini, EID Parry, Triveni Engineering and Andhra Sugars.
Okay, Liberty Shoes is the next question. We've got Akash Raj, who's bought at levels of 170 and holding 230. Kunal, what is the target price that you can give for the near to medium term?
Well, again, a very strong chart. I think very recently many of these footwear stocks have given breakout. Bata, I remember, I think the stock after remaining an underperformer also given breakout, and Liberty Shoe as well. I think the last 3 months has given a very strong breakout, and I think the stock would now play a big catch up over the near to medium term. So I would suggest that take it step by step. You've bought at attractive levels. I think you've bought very close towards the breakout point as well. And if the stock manages to hold on to that 170 mark, which now will probably act as a support territory, then you can see the stock gradually moving towards even levels of 225 to 50 over the medium to long term. So I would suggest the hold, and say with a time horizon of 1 year, 2 years plus, you can expect even levels of 225 to 50 plus on the stock.
Okay, this one is from Padma, and she wants to invest about 200 shares of Burger King at current levels. She wants to ask whether she should go ahead with it or look for other options like BPCL or Brigade Enterprises. Kunal, either Burger King or it's BPCL or Brigade. It's actually diverse sectors altogether. But what should Padma do?
Well, I think all 3 of them are completely different sectors altogether, but purely merit on the charts, I would expect Burger King to do reasonably well, even though the chart history is a bit limited. But the price consistency in trends are quite notable for Burger King over the short term. So I'm expecting that if such a similar price pattern gets extrapolated towards long term, you might see the stock doing pretty well for itself. And out of the other names, I think if I have to pick up, say one of the stocks or one of the sector which looks attractive, I think that's got to be the Nifty Realty Index. Nifty Realty Index is looking exceptionally strong, being one of the few sectors which has given a 10-year, 11-year breakout on the charts just I think a couple of weeks back or last week if I'm not wrong. So looks exceptionally strong on the longer term time scale. And I think if you're looking to invest, then I think this should be one sector where you can look to invest. Not just Brigade, but I think even Sobha, Kote Patil, DLF, Godrej Properties, many of the stocks from the sector looks quite attractive to me from a long-term view.
Mr. Prabhakar, quite a few of the recent listings, one would argue that there is quite a bit of froth. Speaking about one of them that has just come up, we've got Clean Science and we've got Shivakumar who's asking whether they can enter at the current level. What would you say?
I'm not tracked this stock. New listing is very difficult again. If you don't interact with the management, if you don't have a con call, we don't get enough data. Now, and after listing also the stock has rallied so much. Already, when they come with the IPO, many companies IPO are highly priced. And after that also, if you have a listing gain, then it becomes very difficult for somebody looking for 0 to 1 year. No, it becomes very difficult. So we need to at least hear the management for at least 2-3 quarters before taking an investment call.
All right, with that we come to an end of the query segment, but time for the high risk and low risk ideas from our experts. And Kunal, first over to you. What are your high risk and low risk ideas for the viewers today?
Well, both of the stocks are moderate risk idea, and both of them are from the same sector. It's OMCs. I'm expecting some sort of a breakout coming by into this space. Volumes have touched back quite strongly for BPCL and HPCL, so would recommend both of these names. So suggest a buy on BPCL, targets of 500, stop loss to be kept at 440. So expecting at least a 10% up move over the near term for this stock. Same is the case with the HPCL as well. The stock placed at 275 to 76 levels. So would expect a breakout of sorts for the stock. Targets potential on the upside of almost 300 for the stock, and stop loss could be kept at 265.
Mr. Prabhakar, coming to you on your high risk and low risk ideas.
High risk NAM India, best play in AMC. It is one of the top 5 players, and it has 13% market share in ETF segment. So I like NAM India in that. Life insurance, private life insurance is what segment I like. In that, low risk idea is HDFC Life, where due to many claims due to the death of COVID, now things have gone very bad. The results are not so good. But I think at current valuation, considering the growth, this segment has been growing at 15% CAGR in the last 17 years. So I think that kind of growth is possible because of the lower penetration in India. And I think COVID has made many people insure themselves adequately. So that will give them a very good growth. HDFC Life, low risk, high return in a long-term perspective.
All right. Thank you, Mr. Prabhakar, for giving your high risk and low risk ideas as well. On that note, thank you, Kunal, as well as Mr. Prabhakar, for joining us on the show and giving us your take on your high risk, low risk ideas, as well as resolving the viewer queries. And on that note, we slip into a break on this edition of Buy Now, Sell Now. But stay tuned, more on the other side, so don't go anywhere.
आग को फैलने से रोकना मुश्किल है, पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई आग से बचाए।